In this video, we're going to take a look at these 7 top yielding dividend ETFs in Canada. And for each of those top 7 dividend ETFs, we're going to take a look at what sector or industry they cover, where the dividend yield comes from, and whether or not it would actually be a good investment. And to conduct my search for the Canadian ETFs with the highest dividend yields, I'm going to use the TD Webroker Stock Screener, and you can see that there's an option to screen for ETFs. So we're going to go ahead and set up a custom screen for the highest dividend ETFs listed on the Canadian stock exchanges. So you'll see if I scroll down here, I can choose the country. Then I can select dividends and distribution yield to add this criteria and only include the highest yielding dividend ETFs in Canada. So let's go ahead and do that. And you can see that there's 958 potential matches, but I'm going to exclude mutual funds because we're not interested in mutual funds, only exchange traded funds. And then we're going to take a look at what those top 7 are. And this TD screener tool is great because it's automatically filtered all of the ETFs for me and ranked them by distribution yield. So you can see that the top yielding dividend ETF in Canada is offering about 16% per year currently. So let's take a look at the top 7 and see what they are, what industries they cover, where the yield comes from, and whether or not they would actually be good investments. So let's start with number 7 and then work our way up to the number 1 highest yielding dividend ETF in Canada. And the 7th highest yielding dividend ETF in Canada is ticker symbol NUBF. So what is this ETF? Well, you can't really tell that much by the name. It's called the NBI, or the National Bank Investments Unconstrained Fixed Income ETF. And mainly what this ETF is holding is foreign bonds, mostly from the US, some cash and cash equivalents, but that makes up the vast majority of the portfolio. So mainly it's a bond portfolio that yields a fixed income, so every month you're going to get a certain amount. Now, since NUBF is almost exclusively invested in bonds, it gets to have a risk rating of low. However, if we look at the chart of this ETF over time, we can see that it actually doesn't perform well in the stock price. It's been pretty much down only, and so that is the trade-off that you're giving to get that 13% per year dividend yield. Additionally, the ETF's management fee is 0.75%, which is a little bit high for an ETF fee. For example, with some of the Vanguard ETFs, the annual management fee can be as low as 0.03%. which is a huge difference that could add up over time. And so is NUBF actually a good investment? Well, for me personally, I probably wouldn't invest in it. I'm not a huge fan of bond funds, especially since I'm a younger investor, nowhere near retirement. If I was getting close to retirement, maybe I would allocate a small percentage of my portfolio to something like this. But I really don't like the idea of losing the capital appreciation in exchange for something like a 13% dividend at this stage in my life, because I don't think that the opportunity cost is actually worth it. So let's take a look at the 6th highest dividend yielding ETF in Canada, which is ticker symbol HYLD, or the Hamilton Enhanced US Covered Call ETF. So what is that? And so what this ETF is doing is investing in blue chip US equities and then selling call options or covered call options to people that want to trade options. And then the income from selling those options is coming back to you, the holder of this ETF, in the form of a dividend. And they're actually using 25% cash leverage to boost the yield. So that's where that really high yield is coming from with this ETF. Now, if we take a look at what companies this ETF is actually trading, it's got a heavy focus on the tech sector, but also in healthcare, consumer discretionary, financials, and pretty much every industry and sector out there. And it actually looks like they're trading other ETFs that track other sectors. So for example, the biggest holding in the Hamilton ETF is the JP Morgan Equity Premium Income ETF. Now, the management fee for this ETF is a little bit less than the last one at 0.65%, although it has a higher risk rating because it's trading an option strategy with leverage. And if we look at the stock price of this ETF over time, you can see that it has a pretty similar structure where it's more or less down only in terms of the capital value, but exchange for that, you're getting about 13.6% per year in dividends. Now, if we're comparing this ETF to the last high yield one we looked at, the bond fund, I personally prefer this because I like the additional risk reward profile, but it's still not necessarily something that I would go out of my way to include in my portfolio, at least definitely not without doing additional research. All right, moving up the list to the 5th highest yielding dividend ETF in Canada, which is ticker symbol ENCC, which is the Canadian Oil and Gas Equity Covered Call ETF from Horizons. So now we're getting into industry-specific ETFs. So this ETF is similar to the last one we looked at in that it's investing in equities and then selling call options, and the income from that comes to you, the holder of the ETF, in the form of a dividend. But this one is industry specific to the crude oil and natural gas industry in Canada. Now, the distribution yield for this one is much higher at 14.76%, but the risk rating is also much higher because it's using that covered call option strategy, and also because it is limited to one single industry versus the last ETF we looked at was sector agnostic. The expense ratio for this is the highest we've seen so far at 0.81%. And if we look at the stock chart of this ETF, it's had a terrible run over the last 10 years or so. It's down 75%, give or take. And I'm not sure if that is worth the 14.76% yield that it's offering. Now, part of this is definitely because of the underperformance of the oil and gas sector over the last little while. You can see that since the spring or summer of 2020, the sector has actually had a little bit of a boost, so it's up a little from the bottom. But if we zoom out to the last 10 years or so, this ETF, again, is pretty much down only. So would I invest in ENCC? Is this actually a good investment? Well, personally, I would need to do more research into the sector, because this type of investment product could be a good investment if you think that the sector it is specified in is due for a turnaround. So let's say, for example, I did a whole bunch of research on the Canadian oil and gas sector and discovered that it was undervalued and could be ready for some explosive growth. Well, then an ETF like this could be a good option to capture the growth in the equities that it's invested in, but also to get the dividend income from selling covered calls on those securities. All right, moving to the 4th highest yielding dividend ETF in Canada, we've got CALL, CALL.U. And the distribution yield for this, according to TD, is about 14.28%. And this is the Evolve US Bank's Enhanced Yield Fund Unhedged Units USD. So let's take a look. So this ETF again uses the covered call strategy, and we're noticing a trend here, which is that a lot of the highest yielding dividend ETFs in Canada don't just invest in companies or sectors, they invest in them and then sell options on those holdings. And so this invests in the US banking sector and then uses a covered call strategy on up to 33% of the portfolio, which is where that extra income comes from. So being sector specific, it's obviously all 100% allocated to the US banking sector. And if we look at the distribution section, we can see that it's distributing about 12.5 cents per share monthly, which works out to about 14%, give or take. The management fee for this ETF is a little lower at 0.45%, so that's definitely solid. And whether or not you would want to invest in this product, again, depends whether or not you like the sector itself. Is the US banking sector going to do well, or is it going to suffer? If we look at the price chart for this ETF, you can see that it's less of a down-only trend, and it really actually fluctuates depending on how the sector is doing. So recently, the US banking sector has obviously not been doing so great, but you never know, because there have been periods where this ETF appreciates in value and you also get that higher yield. And so of all of the ETFs that we've looked at so far on this list, this one is the one that I would be probably most curious about. But let's take a look at the 3rd highest yielding dividend ETF on the list, which is ticker symbol BANK, or BANK, which is an Evolve Canadian Banks and Lifeco's Enhanced Yield Index Fund. And the distribution yield is just under 15% per year. So as you can probably guess, at this point, this is another sector-specific ETF, but this time for the Canadian banking sector that also uses up to 33% of the portfolio to do a covered call option strategy with also 25% maximum leverage. Now, obviously, that annualized distribution yield is looking pretty juicy. The management fee for this ETF is 0.6%, which is more or less in line with everything that we've seen so far. And if we look at the stock chart for the price of this ETF, it has been more or less down only for the last couple of years. This is a pretty new ETF though. It just actually launched in 2022. And obviously, the banking sector in Canada has been having a little bit of a rough time. So whether or not you think this is a good investment would depend on what you think the prospects are for the Canadian banking sector. But this is definitely another interesting ETF to add to a watch list and to see how it performs over time. I definitely like the dividend yield, and if the Canadian banking sector were to turn around and have a good year or two, then this could end up performing pretty well. Okay, moving to number 2 on the list, this is the second highest yielding dividend ETF in Canada, and that is ticker symbol ETHY.U, which is the Purpose Ether Yield ETF. And this one is super interesting to me. So this yields 15.24%. And the reason why I think this ETF is super cool is because it invests in Ethereum and then stakes the Ethereum and yield farms the Ethereum. So I'm not going to get into the specifics of that, but basically it's investing in the yield that comes from the Ethereum or Ether cryptocurrency. And then that flows through to the ETF holders in the form of a dividend. And the reason why this is super interesting is because there are no such ETFs in the US. They haven't even approved spot Bitcoin or Ether ETFs yet. But Canada already has Ether yield ETFs. Now the management fee for this one is a little bit on the higher side at 1.1% per year. And if we look at the portfolio breakdown, you can see that not only are they investing in Ether, but they're actually writing covered calls on that as well. And if we look at the price performance of this ETF, you can see that it has been down since 2022 when the ETF was launched. Over the last year or so, it's actually started to trend up. And if the cryptocurrency sector and specifically Ethereum was to break out, then this could be an explosive asset class. You can see actually that the year-to-date return of this ETF is 70% in terms of the equity value, and then the yield you're getting is about 15% on top of that. So that is pretty epic. Obviously, this is a super risky ETF, and I wouldn't allocate a significant percentage of a portfolio to this, but I do think it's interesting to put, 1, 2, 3% of a portfolio into something like this, because you get the exposure to the asset class and you get the yield from it as well, which is great. And finally, the number 1 highest yielding dividend ETF in Canada is ticker symbol CALL. You'll notice it's very similar to the 4th highest yielding ETF, except this one is hedged, currency hedged from CAD to USD. So if we open up the call ETF page, you can see that they've got 2 products. One is unhedged and one is hedged. And all that means is it invests in the same US banking sector with the covered call strategy, but it hedges against the downside of currency fluctuation. And so by investing in this product, you're protecting yourself against potential fluctuations in the value of CAD to USD that could affect your investment portfolio. But the portfolio allocation is exactly the same, the strategy is exactly the same, and the performance of the fund is pretty close, although you can see that the dividend yield is slightly higher because of that currency hedging that's going on. So yeah, those are the top 7 highest yielding dividend ETFs in Canada. Some of them I do think are pretty interesting, especially the sector specific ones. If the industries that they invest in have breakout years, they could do big things. Obviously, the dividend yields here are great, but you have to manage that against the risk of depreciation in the value of the capital that you invest. So getting 15% in a dividend yield isn't great if you're losing 30% in the value of your investment. So something to keep in mind. Hopefully you found this video helpful, and if you want to see another one, you might like this. Thanks for watching and have a great day.